Back on Smart Markets, and actually let's talk about the Indian Oil Corporation put out its numbers today, and it's a big beat, Ajay, on all counts. Walk us through the internals.
Well, that's correct. On all three counts, the top line actually was very impressive, over a lakh crore as far as this quarter goes. There was almost a 3,000-4,000 crore beat as far as the net profit goes. 8,000 crore plus is the kind of net profit they posted. Around 4,500 crore, 5,000 crore is what we were expecting. Even the GRM, the very impressive, almost $10. Surely there's an element of inventory gain as well as far as this quarter goes. But the volume growth, the top line growth also indicated the volume growth. The real marketing end of the business remains extremely healthy. So of course the stock ended lower because if you look at the last 1 week graph, because of the bonus buzz, the stock had started running up already ahead going into the numbers. But actually it is a very good number, and I won't be surprised if the dip is actually bought in the next couple of days.
Okay, let's in fact chat a little bit more with B. Ashok, who's the chairman of IOC, and he's joining live here on Smart Markets. Mr. Ashok, good evening. Thank you so much for taking time out for us. Let's actually talk about your GRMs, which are, core to your business. Walk us through what the quarter looked like, keeping aside inventory gains that you've made.
Of course, before talking about the inventory gains, I mean our GRM generally has been very good at $9.98 per barrel. But if you really back out the inventory effect, where we have had good gains during the quarter, the GRM is $3.56 per barrel. But here again, this includes Paradip Refinery, which is yet to be stabilized. So we would like to back out the effect of Paradip Refinery from this. If you back that out, then we are doing $4.5 for the rest of the 10 refineries that we have. $4.5 per barrel, as against $5.99 per barrel during the same period last year. One of the reasons for the drop, I would say, is because the cracks have not been as robust as it was during the last year. There is a difference between the product price and the crude oil prices for both gasoline as well as gas oil. They have been largely muted during the first quarter. So, but then if you even look at a comparison with Singapore margins have actually dropped by $3 a barrel, whereas our drop is around $1.5 per barrel. So one of the things which has helped us is also the good performance of the refineries.
So, but everybody on the street would like to know how much of the contribution to this fabulous numbers this time round actually came from inventory gains. So talk to us about the inventory gain contribution.
Actually, I mean, in terms of dollars per barrel, the inventory gain has been of the order of $6.42 per barrel during the current.
Fair point. Let's talk about the top line part as well. The top line growth has been very strong, taking out that 1 lakh crore mark. How much of that actually came from on the back of healthy volumes? Talk to us about that.
We have had a growth of around 5.3% in terms of product sales for the period, the first quarter.
So aside of that, how would you say your other businesses have grown this quarter, say the petchem side of things, for example?
Petchem also did extremely well. We have had improvement in terms of the profits for the first quarter as well. Of almost, the petchem had contributed nearly 450 crores as additional profit during the first quarter as compared to the same quarter last year.
All right, Mr. Ashok, we'll leave it at that. Thank you so much for taking time out for us here on Smart Markets. Onwards, and it's been another day.